Don Tapscott.
And I'm Alex Tapscott.
And this is What's on Tap. Alex, a lot's on tap this week. I'd be happy for a week that was just kind of calm. Anyway, I guess we should start with the elephant that's kind of in the room, which is the crypto slump or crash. I'd be interested in knowing how you characterize it. But just to review the bidding, the total market cap of crypto is almost halved since it reached a record high just shy of $3 trillion last November. This morning it was about 1.7 trillion. And Bitcoin represents 40% of crypto, 42% of the entire market. And it's dropped well over 10% to this morning. It was $36,600. And Ethereum's lost 19% in the last week to about $2,500. And others have done worse. Solana, which is a great platform, was a real market darling, has gone from $200 to $93. And this is the first time it's been below $100 since last August, and it's trading over 60% down from its all-time high in November. And so what's happening? I mean, sure, there are macroeconomic trends also reflected in capital markets, and it seems that capital markets sneeze and crypto gets pneumonia or something. But there are also some crypto-specific factors, which include maybe Russia's call for a blanket ban on crypto. And of course, we've got the situation in the Ukraine that's concerning everybody. But why don't I have a thought on this too, but why don't we start with you? I mean, how would you characterize what's going on here?
I would say that the vast majority of the sell-off has to do with macro factors, specifically the central bank. I think that Bitcoin and other crypto assets have traded in line pretty much with a lot of technology and growth stocks. And that's supported by the data. The correlation of Bitcoin to the NASDAQ over the last 3 weeks is 89%. And that's actually an unusual. Bitcoin and crypto, for most of their existence, have not moved in lockstep with other assets. They sort of marched to the beat of their own tune. I think probably that was because in the early days, they were new and weird, and there were all sorts of exogenous factors or endogenous factors, things unique to crypto that were moving the crypto market. And maybe it's a sign of its maturity and size that it's becoming more like a traditional asset class where, things like the Federal Reserve and, interest rate hikes and quantitative easing and all these kinds of things actually are having an impact on crypto prices. Though, as they say, there's a bull market somewhere. There's always a bull market somewhere. And in this case, even within crypto, we're seeing a little bit of bifurcation. So it's true that a lot of the high-flying layer one protocols like Solana have had a pretty steep correction early to start this year. There are certain things specific to Solana, but we're also seeing it in other projects like Luna. But projects like Cosmos, for example, which I think will succeed in a world where people are prioritizing how interconnectivity, has actually done pretty decently. And I think the biggest anomaly is actually in the NFT space. So NFT prices have held up remarkably well during this period, and volumes in NFTs are actually set to exceed their highest all time. So I think that's quite remarkable in a month when Bitcoin, as you pointed out, has declined a lot, as have other crypto assets, that NFTs are probably going to have a record month. And I think that probably speaks to just the secular tailwinds unique to that area, that, between the metaverse and Web3 and artists and creators and all this momentum that's driving NFT innovation and adoption, that's able to buck the trend that we're seeing more broadly. I think that probably in the short term, crypto assets will trade alongside other assets like stocks. But in the long run, I think that they will decouple. And that's been true, as I pointed out, for most of their history. Over the past 5 years, Bitcoin, for example, has had little relationship to the S&P 500 or the NASDAQ. I think it's about a zero point 0.1 correlation, which compared to 0.89, which is what it is now, is obviously very low. So I think it's a short-term thing. But I do think that in the short term, should the broader market catch a bid in stocks and whatnot, that crypto will participate. On the Russia thing, there was discussion of a Russia ban, but just yesterday, actually, Vladimir Putin said that he thinks that the market should be regulated, not banned, and that in fact Russia has certain advantages over other countries as it relates to like crypto mining. So who knows? Like I think we probably care too much about what Russia does. I mean, as an economy, it's as big as Italy, right? So it happens to occupy an outsized like mental space. But I think that was, on balance, a positive thing.
Yeah. Well, this decoupling from not just from capital markets and other factors, but also from other parts of crypto is quite interesting to me. I mean, NFTs are going up and other types of crypto assets are declining in value. But then you've got this inexorable explosion of blockchain in other areas in the economy. I've been noticing, just had a chat with the CTO of a very large company, and I was talking to him about the BRI, and joining the Blockchain Research Institute, our whole value prop for the first period was use cases. We're going to help you figure out what you ought to do. And he was very much like, look at this is no longer a thing. Blockchain, it's part of our infrastructure, and it's involved in many, many different parts of our business. And the big challenges that we're having are these transformation type challenges, changing our whole industry, not just us, and so on. So it's sort of this, you remember we called it uneven and combined development of the whole thing. But overall, the arc of this thing is growing, notwithstanding the decoupled elements having lots of volatility.
Yeah, absolutely. I mean, look, like it's a big asset class. It's a 1.7, as you pointed out, even at the bottom of this correction, a $1.7 trillion asset class. When stocks go down, we don't question capitalism, hopefully, unless they go down a lot. In like the financial crisis, I think people were questioning that. Yeah. It's just market resetting expectations for future growth and current value and so forth. And what they say is that in the short term, the market is a voting machine, and in the long term, it's a weighing machine. So I think human psychology. That the point being that human psychology has a lot to do with how things perform in the short term. And I don't have the data on crypto specifically, but when it comes to stocks, the proportion of the selling that was attributed to retail, so small individual investors, was the highest it had been in many, many years. A sign of fear and panic, when individuals are concerned about their own personal net worth, retirement savings, and they start dumping stocks. That's usually the sign of the bottom more than anything else. But yeah, it's also, it's important. It's the world of blockchain and digital assets is one of the few areas, few industries, especially in new technology, where people are preoccupied with markets. Most of the time you're in your private, like in the old days, you were, your company, you raise some money and then you kind of beaver away. You're not worried about the tick by tick data on your token going up and down and what that means for the viability of your business. You were just sort of head down building. And I think that's partly to do with the economic model of crypto that, provides ownership to users and allows them to contribute and share in the growth, that, everyone's kind of a financial stakeholder in a lot of this stuff, which hasn't always been the case. Hey, just changing gears here, there was something we saw come out of the Federal Reserve, a long-awaited report on central bank digital currencies. Long-awaited because I think they announced that this was starting at least a year ago. What was your take on the announcement and on the paper specifically?
Well, the paper is basically a pros and cons paper that invites public content. Actually, let me repeat that. Yeah, I mean, the paper is basically a pros and cons type document inviting public comment. And this is part of their determining whether and how CBDC could improve, the domestic payment system, but more broadly, um, how it could help bolster up the U.S. dollar as the currency of record in the world. And the benefits are all well known and extensively discussed. And it's not just that this would be a defensive move against China's initiative, DCEP, where they're rolling out the Chinese currency around the world. And as this threatens the hegemony of the U.S. dollar, but also there could be lots of benefits, and benefits to central banks to have a better information about what was happening in the economy. You put some money into the supply system, and you can see what happens to it. Are people investing? Are they doing consumer spending? Are they saving? Whatever. There could be greater transparency in the whole financial system. You could have, in theory, a lighter touch on regulation and so on. So what the paper said was that if they were to do this, it would have to achieve certain kinds of things. It'd have to be real benefits to businesses, to households, and overall to the economy, and that would have to exceed the risks. And that it would have to deliver these benefits more effectively than alternative methods, and there are lots of them that could be discussed, including just the private sector creating a stable coin. It's got to complement rather than replace current forms of money, they say. They also want to protect consumer privacy, which is very different than kind of what's happening in China, where their central bank digital currency it looks like, will be able to track every single transaction. Naturally, they're worried about criminal activity, and if they do something like this, it must have broad support from key stakeholders, which kind of gets the big question to me. I mean, who's going to comment in favor of this? Well, you'll see people like Chris Giancarlo, head of the U.S. Digital Dollar Project, a former head of the CFTC, that believes very strongly that America needs to do this, not just for economic benefits, but to protect freedom in the world. But many of the traditional financial institutions are not going to like this because it takes away some of the functions that they perform, traditional banks and so on. And I think that a lot of the crypto people, although I'd be interested in your view, also oppose this too, because they worry that a government cryptocurrency is going to undermine the people's cryptocurrencies and will be a blow not just against the value of those currencies, but against freedom. So it kind of leaves me wondering, like, who's going to argue in favor of this thing, other than some thoughtful policy people and academics and others that can stand back from it all and don't have so much of a vested interest affecting their point of view.
It's a great argument that I haven't fully thought of. Like, who's the constituency, or who are the cheerleaders for this kind of a thing? Yeah. I'm not sure that the Federal Reserve itself is altogether keen on doing it. I mean, if they were, they'd be doing it. I don't think they'd be kicking the can down the road with this public consultation stuff. And I think that there are a lot of people in the digital asset world for whom the idea of a central bank digital currency is like, a jumbo shrimp or whatever. It's like their incompatible concept, an oxymoron. Yeah. So I'm not sure. I think that's very true. It's also worth pointing out that, maybe the Fed itself doesn't need to do this in order for the dollar to be fully digitized. And I think, again, like, it's important to realize, like the Fed says in the report, something to the effect of Americans already use, digital payments and digital technology for moving money around. And that's true in a sense, which is that they're banks are connected to each other and can move, balances between each other's ledgers. But it doesn't actually mean a sovereign or a unique digital dollar in the same way like a dollar in your pocket. But there are examples of that in practice called stable coins, which have grown hugely in the last year from, $25 billion of total circulating value to 165 billion, I think, at last count. So in a year, going five or 6x in size. So, having private companies and DAOs like Maker exporting the US dollar via stablecoins could address this, opportunity without the intervention of the central bank. And by the way, this is not something that the central bank would necessarily be opposed to. In fact, I can't remember one of the members of the Fed, one of the governors of the Fed said as much in a report last fall, basically that, we need not fear stable coins. We've often relied on banks to export the US dollar and act in the country's interests, and this could be no different. So who knows? I mean, this is the whole CBDC, I say often, is the area where the ratio of talk is at its highest to the proportion of like actual stuff that's going on, with the exception of maybe in China. We've done an analysis where we looked at the 60 or 70 or so projects, CBDC projects, with the exception of like 3. They're all concept stage. So very few things are actually in practice so far.
Yeah. Well, we shall see. That might be an interesting research project for us, sort of a national strategy, a CBDC versus the private sector and other stakeholders getting together to create a stable coin, the digital dollars or something like that. I mean, there'd be disadvantages for a central bank, but perhaps many of the advantages of a CBDC in an economy could be achieved. Mm-hmm. I just want to change topic again here because in about 2 hours I'm doing a webinar. It will be live and posted through our social media, but also through the link. But it's a company that's quite extraordinary, and we had done a big case on this that is just being published to our members this week. And I finally read the thing, and it kind of blew me away. It's about creating sustainable agriculture for small farmers, in particular in the developing world. And these, smallholder farmers are really very vulnerable right now to all kinds of threats, climate change being a significant one. But with access to a blockchain platform like this, they can begin to implement sustainable practices and also to compete in some ways with big agribusiness. The company's called Demetra, and it's a startup that's delivering agricultural technology to millions of farmers worldwide. And I'm kind of stunned that I didn't know about this actually. And blockchain is really at the key. So get this: members of the ecosystem, farmers and others, can use blockchain as a shared ledger to register farm assets. They can record licenses and permits. They can conduct peer-to-peer transactions. They can build smart contracts that are automated. They can obtain loans and insurance that are peer-to-peer. They can aggregate seed quality information. They can monitor crop growth. They can track yields after they leave the farm. And it's kind of like a complete platform for these companies. So I just encourage people to watch the webinar, because we're going to get into how the thing works. And basically, farmers acquire these Demetra points within the app, and they exchange them for agricultural products and services like agrochemicals or crop insurance or expert advice and so on. And the whole thing uses an ERC20 token to drive the the sort of farming platform as a circular economy. And the liquidity providers stake these tokens to power this whole economy. So the technology is very sophisticated too, in terms of the way it works. And it goes back, Alex, to what we said in the book about blockchain for good. That this technology can help us solve a bunch of big problems in our economy and in our society.
Absolutely. Well, it's going to be a great webinar discussion, and I think you're also going to have the author of the report that the BRI released, as well as people from the company. The report itself, it's a really great piece of work for BRI members who can access it. Would strongly encourage you to check it out. I mean, look, like, one of the big reasons that we're so focused on this technology and have been for so long is both, the potential for new businesses and wealth creation in the private sector and so forth, but also to solve global problems as well. So should be a great discussion.
Yeah. Going back to the initial idea in the book that we have this bifurcation of wealth in society. The economy is growing, the middle class is kind of stalled. There's wealth creation, but declining prosperity, at least in many parts of the world. And rather than just distributing the wealth, maybe we could pre-distribute the wealth and make the economy more democratic and enable smaller players to benefit from the value they create and also to compete better. So that's kind of a great story along those lines.
Yeah, absolutely.
Our time's up, but I'll just a couple of announcements. We have new research that's just published this week for our members of the Blockchain Research Institute. If your company is not a member, go to blockchainresearchinstitute.org and learn more about what we do. The research is the promise of community-owned prediction markets, why decentralized crypto networks are inevitable and important to society. Prediction markets has been a big interest of yours, Alex. We've got the webinar that I just mentioned on blockchain, food safety, and sustainable agriculture. And if you just find our social media or the Blockchain Research Institute YouTube channel, that thing will be posted tomorrow. And also, I'm doing this is really interesting. I haven't done this before, an Instagram event. I'm being interviewed by a social media influencer who has tens of followers on Instagram. And she's actually based in Beirut. And this has been organized by the BRI in the Middle East, our operation there. And it's going to be pretty fast and furious, probably over in 40 minutes. But it's going to be she's going to be throwing a bunch of questions my way. I'm not sure what they are, but I look forward to hearing how I respond. But it's going to be a good experiment for me because I'm ashamed to say I've never actually done an Instagram live interview. So if you go to me on Instagram, just follow me, Don Tapscott, one word, no spaces. You'll be able to register for that thing too. That's going to be on Monday at 1:00 Eastern time. So I guess that's it for this week. And
so.
All right. And we'll check in same place, same time next week for What's on Tap. Thanks, everybody.